Good morning. Dornbush download number 80, an 8 handle. Andrew, Michael, good morning. It's all happening here at Dornbush this morning. Hear the phones going off?
Where is it?
That's where April inserts the crickets soundtrack. No, look, it's been an interesting week. The previous couple of weeks, as we've said, it's just been going gangbusters. Yesterday, though, the wheels just sort of, I wouldn't say fell off, but we just sort of went a little bit wobbly there, didn't we, Michael? It sort of came out off a bit.
Yeah, that's right, mate. Taking a bit of a breather, I think, more so than anything. The 5,000 point mark still looks like it should maintain a reasonable level of support, I suppose. But yeah, we'll be certainly keen to see if the market stays above that level, and hopefully, yeah, we might bounce and go onward and upwards, so to speak.
Talking of markets, though, you and I were just reading an interesting piece about the Trumpinator, Donald Trump. Again, another resounding victory in Florida, and so therefore that Mario Rubino lost his home state. He's out.
Yeah, he's gone.
Whereas I can't remember the bloke from Ohio, but he won his home state. But there's a lot of concern that the Don might actually get up. What was some of the stuff we were just reading?
Yeah, look, there's a general feeling that if Don puts on the president's cap, that markets will not like that one bit. And yeah, I think there was a doomsday sort of report from one of the traders over in America suggesting that the S&P 500 could drop as low as 1,000 or back to 1,000 points.
So to give that some perspective, we're about 1,600 at the moment. So they're basically predicting a 600 point drop if the Donster gets a run. So long way to go. It's only March and, leading into November, and whoever the Republican candidate looks like they're going to have to take on Hillary, who will be quite a tough opponent. Markets, again, probably won't be terribly happy if a Democrat keeps the White House, because we've had 8 years of Democratic rule, or Labor rule, if you want to use Australian parlance. But, if that happens and, and even the threat of it occurring, I think that's just one of the things that's causing that uncertainty at the moment.
Yeah, very true. But yes, certainly, I'm no political expert or analyst.
We'll leave that to Councillor Goulson.
I must admit, I thought Don's chances were towards the low side. But yeah, it is looking like he's going to get that Republican position at the very least. So interesting prospect. He's an interesting character. Got some interesting ideas. I'm being very politically correct here, but yeah, certainly at this stage, markets may or won't like the news if he gets the top job.
And this isn't a political video, but my 10 seconds of why Don is doing so well is because he's tapping into that mainstream America whereby they don't feel like they're being listened to. And he's saying all this stuff that they want to hear. Now, whether he can do any of it is another story, but he's talking the talk. Yeah. And that's why he's cutting through. So, again, Hillary is being the consummate politician. He's being the maverick. And he's just absolutely cut through the Republicans like a hot knife through butter. And he could potentially do exactly the same thing. And like you're saying, that strategist saying that if that occurs, it's not going to be a happy outcome for market. So watch this space. We'll keep talking about this. Last week, Michael, we spoke briefly, not you and I, Dan and I spoke about dividend stripping, but we didn't really go too much into it. Do you want to briefly talk about it relating to where the banks are coming into their profit reporting?
Yeah, for sure, Andrew. Yeah, basically... and I guess one step back, we've seen the majority of companies now announce their interim results, their half-year results, and that's based on companies reporting to the 31st of December. Some of the banks have that slightly different reporting season, or financial year rather. So Bank of Queensland reports its half-year results as at the 29th of February. And then the likes of NAB, ANZ and Westpac report their half-year results from the end of March. So we're going to be getting those announcements coming out shortly. But of course, as those announcements come out and as those reports come out, those companies declare a dividend. What a strategy is, the dividend stripping strategy, is effectively buying into these companies as they lead up to going ex-dividend, getting the dividend, and then, perhaps looking at selling them, because as we know, shares tend to build. The share price tends to build into the dividend. There is an issue, however, as far as franking credits are concerned. And
Tax credits.
That's right, yeah, the imputation credit. And effectively, the general rule is that the share needs to be held at risk, which simply means just held for a period of no less than 45 days. And that doesn't include the buy day or the sell day. So it's effectively 47 days, I guess, in total.
And that includes weekends and all that stuff.
Yeah, absolutely. There is a minimum threshold. I think it's $5,000 worth of franking credits for individuals. My understanding is that, say, a super fund doesn't get treated as an individual. So all super funds need to hold for 45 days at least to get the credit. Check with your trustee accountant, of course. But yes, but of course, as we're leading into these reports, into these ex-dividend date times, yeah, we're coming into that sort of 45-day zone now as we're speaking. So a strategy, yeah, certainly to look at, if you could do with a few more dividends, a few more franking credits, is to look at buying into some of these banks that will be reporting shortly. Traditionally, banks are pretty good dividend payers, as we know. And yeah, effectively strip the dividend, assuming that the price and a few other bits and pieces work out.
So there's sort of really two strategies in play here. There's as you're saying, the shares tend to run up into the dividend. So there might be a little bit of capital growth, and that's assuming the share market's normal and the Donster doesn't get some traction and Britain doesn't leave the euro and China. Like, there's lots of other things going on, but all other things remaining equal. There's two strategies in play. Either hold it so it goes ex-dividend and you get the dividend, or sell it just before it goes ex-dividend and capture some of that potential capital growth. So strategy that we've seen clients starting to use more in markets that are flat. So if you're interested, have a chat to Dan, Michael or I, and we can talk you through it and whether it suits you and all that type of stuff.
Yeah, absolutely.
Okay, what was the other thing we were going to talk about? I'm having a brain fade here.
Yeah, couldn't have been too important. Probably the only other thing, Andrew, I can think of is Federal Reserve's meeting in America.
It's causing a bit of uncertainty.
Yeah, they're sort of, I guess, in the throes at the moment. We'll hear very early tomorrow morning whether there's any move on interest rates. I think there's a 95% chance that things will just stay steady, in that 0.25 to 0.5% band. There is a slight probability actually that there may be a cut, but yeah, that won't happen. But yeah, the commentary is always what the market will be looking at, and just a bit of an outline as to where the Fed Reserve see the economy, good, bad, or indifferent.
So if we go back 3 months, we were talking about one interest rate rise every quarter. With the world economy uncertain, that's all stopped. And you look at the Reserve Bank minutes here in Australia yesterday, and they were a lot more downbeat. So there was the statement, which was pretty steady, but then the minutes of the meeting were certainly a lot more downbeat. And there's a lot more people thinking that, in fact, next month, as early as next month, there could be an interest rate cut here in Australia. And, on face value, you'd think the market would take that pretty well. The market did not take that well at all yesterday, which is, again, one of the reasons why the share market came off. Anyway?
Yeah, and an interesting prospect too, Andrew. I guess if we do see another cut, before the May budget as well, there's a fair bit happening sort of in that sort of top end economic sphere. So yeah, a lot to keep abreast of over the coming months.
Plenty happening in financial nerddom. Till next week.
Thank you.